you've got a camera on. Can you see that okay? Or I'll put it up again.
Now I can see it.
Okay,
Oh,
good.
now it's going again. Now it's back.
Okay, yep. All right, so attachment A is the detailed audit report. I'm just going to scroll through this in reference to particular pages. This was presented by Melanson CPAs to the Audit Advisory Board back on July 28th. And in this very detailed report, there are several audits that were reviewed. Number one is end of the year report audit. Number two, financial statements. Number three, student activities. And then number four, a single audit. And in this, I also included a copy of the management letter as well. John Jasowitz, I apologize if I'm mispronouncing John's name, presented to the AAB that particular evening back in July. And just some of the highlighted points as I wrote in my executive summary, going to bring it down to page 16 here. And first of all, as John noted that particular evening, there was a negative balance of 125 million, excuse me, 787,151, and this was due in large part to the OPED obligation, which is 175 million and change. Let me just get down to this page here. This page here, page 16, and this down to the bottom line number, total net position, again, 125,787,151, and again, that is due in large part to the OPEB liability. OPEB, by definition, other post-employment benefits, an unfunded benefit. Scrolling down to page 18.
Dan, I'm sorry. Do you want us to ask questions or just hold till the end?
If I may, just go through this
Sure.
very quickly, Ken, and I'd be happy to answer questions then, if I may. On page 18, the general fund balance at the end of 19 was $1.3 million. At the end of 18, and that would have been the beginning point in terms of the E&D process. Back to down to page 22 of this report here. Again, looking at FY, how we ended up in FY 19. This page here is a quick summary of revenues and expenditures for FY 19. And as you can see, over here where my cursor is here, our fund balance, the general fund, we ended that year with a balance of $134,436. If you recall, we started out the year with the issue of transportation, the overpayment, and then the repayment back to the DESE. Secondly, we had the issue in the spring and April relative to Medicaid and that challenge there. So when it was all said and done, we ended up to the good 134,436. Going to jump down to page 47. And here, again, they speak to our OPEB obligation. And again, that figure per FY 19 is 173,218,164. It's an increase of almost $38 million, almost there. A couple years ago, there was a line item in the budget of approximately $10,000, and that has not been funded since. And with the interest, that balance, if you will, is $10,377. So as you can see, there our net liability is $173,218,164, and that's roughly a 28% increase over the FY 18 figure. And then I'll just jump down to the management letter, and at which point I'd be happy to take questions on this piece here. So we received the management letter, and there were three issues identified in the management letter. The first issue was to improve controls over vendor invoice processing. And again, as the auditors identified, there were some payments that were processed where there was no authorization for payment. And secondly, as they noted, the person who authorized the payment is also the same person who is also making the payment, namely one of the AP staff. Our response to this is that, and we're doing this now, we are doing both a monthly audit of the previous warrants. Secondly, I have pushed up the closing date on the warrants. In essence, we're shutting it down by Wednesday afternoons. District staff have roughly 2 days to complete the warrant. Worst case scenario, Monday morning. I then sit down and I block out X amount of time to review the warrant, to ensure that all signatures have been secured, and then we move it along. And again, as a backup to that, then we do a follow-up review a month later. One of the staff in the business office who is segregated from the warrant process is responsible for doing an audit to ensure that all invoices have the appropriate signatures in the warrant. The second issue that was identified to the management letter is relative to the federal grants manual. And this was an issue a year ago where it didn't exist. The feds changed the guidelines relative to grants management of federal grants about 5 or 6 years ago. And at that time, all districts were strongly recommended to prepare a grants manual. So that hadn't been done. And when I came on board, this is one of the findings that the auditors identified. And we corrected that last year for the FY 18 audit. Their issue here is that I just need, in the manual, I just need to update the thresholds, the procurement thresholds for the revised procurement thresholds, which we will do relative to the manual. And then the third issue that they identified in the management letter were the number of bank accounts. And they expressed concern about 65 bank accounts. And currently I'm working with Treasurer Dunbar to review these accounts to see if there are any dormant accounts that perhaps could be closed out. If not, then I'll follow up. Jim and I will follow up, and we'll have a discussion with the lead auditor relative to this particular finding here. So I'm going to stop here for a couple of minutes and be happy to answer any questions. Ken, you had a question, so happy to respond to that at this point.
Sort of more of an observation than a question, and nothing on you.
Sure.
I find the big number for the OPEB kind of distracting in their reports, because you look to the bottom line and you see this big $125 million what I think is sort of malarkey amount, and then it makes it so easy to miss numbers that are smaller but yet real, like $100,000 here, $200,000 there. I really wish they could like pull that out and have it just be separate from the rest of the report. Like we have obligations for next year for salary for teachers, and we don't report that as, you know, a future obligation. We pay as we go, right? For our retirees right now, we're going to pay as we go 20 years from now. It's not going to change. So it just strikes me that like when it's in the report with everything else from the year, it struck me as distracting and just making it easier to miss other things. But I know it's not like you're doing. It's just kind of one of my pet peeves.
I understand.
Yeah.
I understand. All right. And again, if it's, you know, when the auditor said, again, what's driving that big negative number is the OPEB number, the 173 million, which again, you know, they're currently working on the 20 audit. They started their work about a month or so ago. And that figure will most likely increase next year as well. And my guess, it'll probably exceed over 200 million. But I guess we'll wait and see when that work is completed.
It'll increase every year for all time.
Yes, it will. Yes, it will. I'd like to now jump down into the next.
So hold on, Dan. Are there any other questions related to the audit materials that Dan's covered so far? So Dan, I had one or two real quick. So you know, the three items that were in the management letter findings, number 1 and number 3, the vendor invoice processing and the 65 bank accounts. Correct me if I'm wrong, but haven't these appeared on previous management letter findings?
So not this one here, Mike. There was an issue, I believe, in the 18 audit where relative to payroll, and there was a concern about timesheets not being signed off on. We did make that correction, and in this very detailed report, they do acknowledge the fact that the district satisfactorily resolved that issue. This is now this is on the AP side, and again, Mike, and for the committee. In both instances with payroll now, what I do is that I sit down with my payroll staff on one of them, and we go through payroll. She gives me a quick overview as to some of the salient points in the payroll. And the same as well with processing the AP warrant as well. And in terms of the bank accounts, go ahead.
Yeah. So I'm sorry, Dan. Let me just get to my question on the vendor invoice processing in particular. And I thought that we had something similar in the past, but maybe I'm confusing it. But I guess my question is, within Munis, do we have any kind of workflow processing or approvals-based processing? I mean, it sounds like the issue there was that we've processed payments with no authorization. And so do we have the capability within Munis to set up rules that trigger the appropriate approvals before we agree to approve and ultimately pay, approve a PO and ultimately pay a invoice?
There are the short answer is yes. The longer answer is, and I think where they were coming from, Mike, is as they wrote here, they were pulling utility bills, they were pulling electric bills, they were pulling phone bills, and they were pulling
they're pulling recurring expenses.
Yeah, they were pulling paper copies of invoices and not seeing any authorization to pay.
Right, but even still, recurring invoices are still things that are subject to approval. So I guess my question is, what is, it's one thing to approve or view the warrant, but is there something that we can do operationally to be able to apply, to be able to make sure that there's eyeballs even on recurring expenses and approve them as they are being generated?
Sure. There's actually two sets of eyeballs now. The first is with Mr. Cavello, our facility director, and myself now as the second person. Jim should be signing off on all those invoices, number one. And then number two, in my review, I would look for his authorization
Okay.
to pay that invoice.
Okay. And as you put together your response to the management letter findings, do you anticipate reviewing that response with the audit advisory board prior to submitting that to back to the auditors?
Yes, I do. This will serve as certainly one agenda item for our next meeting, and I will present what we have done to date and what moving forward, and there's a few other things that need to happen as well. But yes, it'll go before audit advisory, and then we'll bring it forward to Melanson CPAs.
Okay, thank you. Is there any other items related to fiscal 19 audits that either we have questions about or that we need to review tonight?
Mike, if I may, there's a few more things in the fiscal 19 audit, not just the financials, and I'm happy to go through them quickly. I'm happy to give as much time as you'd like, but a few other things as well I want to bring to your attention. Okay. So I'm just, as you can see here, I'm just scrolling down. This is the second finding, and then as I said a moment ago, this is the third finding as part of the management letter. And again, here's our response to the findings that we prepared for them this past summer. Gonna scroll down now to student activities, student activities. Frankly, they're problematic. There were 8 findings by the auditors. One of the bigger issues that we're working on now is that there is no manual in place. The rules changed again, I'd say about maybe 5-6 years ago, relative to student activities, and at that time the DESE had encouraged districts to present to prepare manuals for staff. So starting here, as you can see, this is the first schedule of findings, and there were 8 findings here. So there was work to be done. The first, number one, is to prepare this, to complete this long overdue manual. That's number one. And then number two, as part of that, is to do the necessary training with the respective stakeholders involved in student activities, be they principals and secretaries, or for that matter, any staff who have any involvement with student activities. So that's the second task that needs to be done. This has some urgency now to wrap up this work. And again, I'm just going to quickly scroll through this, and these findings are in attachment A of your packet. So I'll just scroll through them. This one here, number 4, annual audits. The law states that every 3 years, student activities need to have an external audit by an accounting firm. But the law also states that every year there should be an internal review. I can't do that internal review because I sign off, I authorize the payment. So what they're suggesting here is that happen, and that we identify somebody, and perhaps from outside the district, who is familiar with student activity funds to do that internal review, kind of a check and balance, if you will. They use the term annual audit, but it's more or less an internal review.
Any questions on the student activities audit or findings?
Yep. This is Malia.
Yep.
I'm wondering the timeline of this because, well, I can't pull it up. I know at some point in the past year, I recall sending an email to Dan with some kind of question about a student activities process related to a warrant. And I remember that this topic of this handbook came up and that it was being worked on. I can't pull up my emails to know when that was. It was obviously before COVID. It was probably in the fall. So I guess I'm curious the timeline of this and if it's something that's been started, because I know that this has come up in the past, even before your time, and has come up since you've been here, that we lack some process in this area. So I just obviously want to make sure we have a timeline for that, and it's something that's being worked on, even though I know there's 100 things being worked on right now.
So you're correct, Malay. We spoke about this last year. We started this last year ever so slowly, and then the year kind of went south in February or thereabouts. There is urgency now. This is my charge to address these 8 findings, and as I said a moment ago, once this document is completed, I will certainly share with Audit Advisory. I'm happy to share with this committee as well, and then bring it forward to the auditors so that they're aware that we have addressed these findings.
Any other questions on the student activities audit? If nothing else, then let's move on to fiscal year 20.
I'm sorry, Mike, just real quick. The end of the year report, again, we have a clean report, a perfect report. As a matter of fact, the auditors said that it's rare that happens. There were no findings whatsoever. The issue relative to Schedule 7 and transportation was resolved 2 years ago. If you recall, I fixed that issue in like my first or second week here. So this is just their quick summary of the end of the year report, and there are no issues at all. Staying with that same theme, the last audit that they did was a single audit, and this is an audit of all of our federal grants, where cumulative value is $750,000. And again, similar to the end of the year report, there were no findings at all relative to the single audit and the administration of federal grants. And I'm very pleased to say that as well. And I did have a conversation with the DESE the other day relative to this as well, and they confirmed that that we were good with the FY19 single audit and no findings, as opposed to a year ago where I believe there were 4 findings that have all since been addressed. Now we're wrapped up.
Okay.
Any final questions relative to any of these audits? This here is just a summary of the various federal grants that they looked at for FY19.
I think we're ready to close out year 20. And, as I recall, Dan, we went into this topic in pretty significant detail. So what updates in the last meeting? So what updates do we have today?
We did, Mike, and there aren't any updates. The only update that I was hoping to share with the committee are the final numbers for FY20. Again, as I had reported to the committee at our last meeting, the unofficial balance was approximately $105,000 and change, and the auditors are in now. And as I said a moment ago, they've been working on the 20 audit for about a month or so. I don't have that final official figure from them. So I'm hoping that, well, I expect that I'll have that information for the committee at our next meeting.
Okay.
And if there aren't any
Any
other questions,
questions?
I'll just scroll down. And again, we did review this at length at our last meeting.
Any questions on closeout activities for fiscal year 20?
Yeah, I'm sorry, just this kind of just briefly. I know you've answered this before. I just want to make sure it's in my head right. We have that large amount encumbered for transportation, right? How long can that just sit there?
Sure.
Actually charge against it.
Yep, we do. So that money remains encumbered. We rolled it forward into 21, and that money can sit there if we had to through the end of this fiscal year. And if there is no activity, if there is no action, either we close it out and then we look at the issue of refunding money back to the towns, or if we were to make a payment and if there were a balance left on that purchase order, it would just fall to the bottom line. And in the process, in the E&D process for FY21, the balance, whatever it might be, would be closed out for E&D. So theoretically, and I did confirm this with the Department of Revenue, that could sit there through June 30 of 21, but no later.
Dan, this is Malia.
Hi.
Do we have, I can't remember if this is in here. It may be. If it is, tell me. You can come back to it. Is there an update on that situation? Because I know it's now sitting with legal. I'm not really clear on why we didn't really get to that in our last meeting because we voted no. And I thought we were done with that situation.
On our agenda, we have this as a topic coming up.
Okay, sorry, just skip it then. I forgot. I lose track. I'm sorry. Thank you.
Yeah, no worries.
Just skip over.
Yeah, but I guess I do have a question on Dan, your response to Ken, and I'm just I'm not understanding it. So maybe you can help me understand it. My understanding was that when it came to the dollars that were allocated to transportation, we had an opportunity to roll those funds into a transportation stabilization revolving account. We missed the deadline for that.
We did roll 150, Mike, into the stabilization. We did.
Right. I'm referring to the 1.4 million that reflects the the total value of the if we were in school and buses were running, the total value of what was outstanding in the contract. So we missed the opportunity to roll those funds, my understanding, into that transportation stabilization revolving account. We also missed the opportunity to identify any funds that could have been applied towards our transportation reimbursement for next year because we haven't made a payment. Help me understand, how is it, I'm just trying to reconcile the statement that those funds, I think I heard you say, rolled over into fiscal year 21. I guess help me understand how that works and under what conditions those funds can be used and how they can be used at this point in time.
So when we closed out the fiscal year, we looked at those obligations from FY20 that remained outstanding. Obviously, transportation is one, and of the 1.6 that was carried forward, 1.4 that was transportation. So there's approximately $200,000 in outstanding invoices that perhaps the invoices were submitted, but the goods had not come in yet. So we carry forward that amount of money into FY21. And that money, and I'll just stay with transportation, the 1.4 in transportation that is encumbered can only be used to pay for those invoices. for AA, for Vanpool, and there's a third company with a very small amount in that as well. It's about $4,400. Those dollars can only be used to pay those invoices, period. In the event that there is no resolution with the settlement, then the money will sit there, and either one or two things will happen. We'll close it out at the end of the fiscal year, and it'll become part of the E&D process, or the towns are likely to request a portion of their share back. Again, do we make that adjustment in the FY22 assessments, or do we return a sum of money to them this year? I don't have an answer to that. I would need to speak with my DOR rep relative to that.
Okay. So when we spoke about this in the past, one option was that we would have had the opportunity, if we had resolved this in sufficient time, although we didn't know what that time was, that we could put these funds into revolving to be able to access them in fiscal year 20. The other option that we talked about was that these funds could be accessed as part of the certification process for fiscal year 20. That would happen sometime in the fall. But what I think I'm hearing you say is that these funds are quote unquote out there. They're encumbered. They can only be used to pay our previous quote unquote obligations to AA and Vanpool. And if they're not used to pay AA and Vanpool to the full extent of the 1.4 million, we would need to wait until the end of this fiscal year to be able to determine whether we want to either return some portion of those funds to the towns or build them into fiscal year 21 E&D. Am I understanding that correctly?
Almost. Just a point of clarity is that if we make a payment and the payment is less than what the encumbrance is, let's say we make a payment for $1.1 million, so there's $300,000 there, that would remain in our budget, and when we close out the year, then that falls to the bottom line for E&D. Or if we were to make a payment 3 months down the road, in January or whenever, and it takes that long to resolve this, and there's a balance there, then I guess the question becomes, do we return to the towns the balance that wasn't paid? And that's a question I would need to speak with the Department of Revenue on. The towns are certainly aware that money is sitting there. And certainly, if there is no resolve, then we probably have to look at making some type of payment to the towns prior to June 30th of this year, or as I said a moment ago, perhaps that gets dispersed to the towns in next year's assessments. I don't have the exact answer to that here tonight.
So the last that I have on Dan, and it's interesting that you picked the $1.1 million because that reflects the 75% I think our committee has repeatedly voted down. But if there was some payment, as you said, in the next month or 2 months prior to the EC certification process, would those funds, whether it's 1.1 million or 1 million or $500,000, would those funds at this point be able to be counted towards our transportation reimbursement expenses from last year for consideration for this year?
That's a great question, Mike. And as I think I had said,
it was a great question. I asked it a month ago, and it was a great question when I asked it a week after that at our full school committee meeting. Do we have an answer on that yet?
Yep, and I think I did answer it both times. And I think what I said last time is that I would certainly have a conversation with Jay Sullivan to make him aware that we made the payment of X dollars, whatever the value is, because as I had stated at one of our recent meetings, Mr. Sullivan had asked SBAs to amend only one line in Schedule 19 from the FY19 end of the year report, and that line was the amount that we said that was in our budget for FY20. And what he asked us to do, as I previously stated, was to report the actuals that was paid to vendors, because he was recalculating the cherry sheet figure relative to regional transportation. As I stated before, the DESI makes the payment twice a year, usually around January, February, and then in June. It's unlikely that if we were to make a payment of some amount, that would help our first payment. My guess is that he's, working on a revised cherry sheet figure, but I'm hoping that there could be an adjustment in the second payment in June, and that adjustment in the second payment would be reflective of the payment that we made to AA Transportation. That's what I'm hoping. Right. And frankly, I will reach out to him. I will reach out to him tomorrow and ask that question. If we make a payment of some amount in December, would that help us in terms of a second disbursement for regional transportation in June?
Any other questions on this?
Hey, Dan, this is Carl. Just a quick follow-up for that discussion as well. I mean, it would seem, I guess this kind of the second follow-up to that would be if, like, say we make a payment of like 1.1 million in December, and you talk to the state and they're like, no, it's not going to factor into the reimbursement throughout the rest of fiscal 21. Then the follow-up then would be, when we look at what we paid for transportation during FY21, we're paying 1.1 million above what we otherwise would have. And so the question is, would that then factor into our reimbursement that comes in FY22? And so that's because that's kind of the other part of it, is that by paying last year's transportation in this fiscal year, we're elevating our current fiscal year transportation expenses.
I understand.
So I guess kind of the second thing is that if he reaches out and he's like, no, it's not going to change your first or second payment this year.
Yep.
Then kind of the follow up is like, well, is that going to affect then our reimbursement in FY22? So that's just kind of a follow on to that. It kind of depending on what he would say, I would.
Right. And my quick answer, Kyle, is that it wouldn't, because this is in essence still in an FY20 expense. These are FY20 dollars. Typically at the end of the fiscal year, any open invoices get rolled into what I would call a previous year account, and basically in that previous year account, you put aside money, basically the value of the encumbrance that is used to pay that invoice. So I don't see where this would help us with FY20 with FY22. I'm happy to ask him that question as well. I'm pretty sure of the answer, but I'm happy to confirm that as well.
Any other questions on this? All right, let's move into 21.
All right, so I'm going to scroll down to attachment G, and again, you have a budget report from Munis, which reflects our year-to-date activities, and then subsequent. There's a second Excel document where I project out, and as I stated earlier, our Chapter 70 now is projected to be approximately $411,000 less than our original budget. This $411,000 shortfall, which is below the House 1 budget, is in essence, this is the value, excuse me, of the Student Opportunity Act that was part of the governor's House 1 budget. This figure here of almost $30 million that was in that figure there. And through the various machinations over the summer, again, our current estimated Chapter 70 is 29.5 million. And though the state budget is not finalized, what the DESE and what DOR are telling us is that this is most likely going to be our Chapter 70 payment for the year. Just below that is regional transportation. And as I said a moment ago, and as Jay Sullivan has stated in our various meetings, you know, there is no definitive information relative to regional transportation for FY21. We built a budget at 2.4. This was the figure was the governor's House budget. I also want to remind the committee again that what needs to happen this year relative to regional transportation is that the DESE needs to make that second adjustment that goes back a couple years ago. As I mentioned in my opening remarks this evening, the DESE forgot last year to make the second adjustment of approximately $133,000. So when they do finalize the figures for regional transportation, they need to back out of that figure, whatever it will be, approximately $133,000, and then it'll make them whole in terms of the overpayment from several years ago. Note 3 speaks to the charter reimbursement. Again, we've got approximately 16,000 and change that has been received and booked. The figure there is from the governor's House 1 budget. Again, that figure is likely to change, but again, we have no guidance as to what that's going to be. Medicaid. We did make an adjustment in the 21 budget in terms of reducing our estimated receipts for Medicaid, and as I note there, we did receive last week a payment of almost $76,000, $75,903, and this was confirmed as well from Mass Health, from the Executive Office of Human Services. So there's 76,000 in the bank. There is another payment due in December, and again, I'm hopeful that we'll meet that mark relative to the 450. We'll have a pretty good sense in December where we will land with Medicaid for 21. Interest income, again, the past couple years, we have done extremely well here. Kudos to Treasurer Dunbar for the work that he's done relative to our investments. And we did make an adjustment in the 21 budget. We bumped that up to 50,000, and we have surpassed that in the past couple years. We're off to kind of a slow start this year. A little bit over 1,800 is received, so we have a ways to go, but I'm confident that we'll meet that mark. In miscellaneous, again, miscellaneous was a line where the past several years the figure there was it wasn't an accurate accounting of the actual receipts that were received. So we made an adjustment there for the 21 budget, and there's a nominal payment in there, $5,400 and change. So we have a ways to go there, and certainly we will be monitoring that as we go through the year. I need to point out too that though not listed here, other factors relative to the state budget, circuit breaker. Again, in speaking with the DESI last week, they really have no idea where we will be for circuit breaker for FY21. Typically in the middle of September, the DESI releases information on what districts can expect in terms of payments during the year, and also the value of the reimbursements. Jay Sullivan had stated last week that the DESI was hopeful that perhaps they could release one payment come September 30, and they were hopeful that that might be at or about 70%. However, that has yet to happen. So circuit breaker remains a big unknown in terms of the FY21 reimbursement. As the committee knows, we did bring forward approximately a little bit over $1 million from FY20, and most of that has been spent. And when I say spent, it's it's either encumbered or it's cash out the door. So there is a nominal balance remaining in the 20 carry forward, and again, that carry forward must be expended by June 30 of this fiscal year. I'd be happy to answer any questions on the revenue side. All right. Move on to the expense side. So on the expense side, and as I had stated in my executive summary, I'll just come back here. There's approximately 7.8 remaining on our bottom line. However, keep in mind that we have made some adjustments. We're in essence operating on a 1/12 budget. You see, for example, in our salaries and stipends, the available budget is 4.5 million. But as I pointed out when I did the analysis of salaries and stipends, there's still the better part of $1 million that remains to be encumbered or to be adjusted. Since I prepared this report last week, we have encumbered for the year all coaches' salaries, so that's several $100,000. There are still a number of vacancies, and again, our day-to-day subs, we can't encumber those dollars. Also, keep in mind too that 4.5 includes the new positions that have not been filled, and also the better part of 1.6 million that was part of our tier 2 cuts. So when you factor in those adjustments, it's significantly less than the 4.5. Under benefits and insurance, there is a shortfall there of approximately $206,000. As I had stated in my executive summary, we're still waiting from our broker on the credit to be issued from Blue Cross. Since I prepared my report for you last week, I was told by Mr. Carlson, our HR director, that has been pushed back now to November in terms of when we will realize that credit from last May. So that's issue number one. Issue number two, not really an issue, but again, we built the 21 budget using school choice as an offset. As I stated in our previous meeting, we did bring forward approximately $370,000 in change in school choice. Though those dollars have been used this fiscal year, they've been used primarily to address PPE needs and other needs relative to addressing the pandemic. With the approval of several federal grants, including the school reopening grant, that will allow us to make some adjustments between school choice and the grant and free up that cash in school choice. The school reopening grant that we've been speaking about at several meetings, that's actually retroactive to last March 1st, going back to last year. So that'll be very, very helpful. So once we make those adjustments between school choice and other revolvings, if the funds are there, for example, in school lunch, in ECC, that should negate that shortfall there. Instructional support, almost a better part of $2 million remains unencumbered. But as I had stated in my executive summary, there are a couple of big numbers within that. Number one, and as you saw in my executive summary, the general supplies for the buildings. Again, we limited principals to approximately 50% of their lines spending, just given the uncertainty of the budget. So that being said, there, as of last week, there was still a balance in those allocations of approximately 236,000 and change. Secondly, textbooks. Again, Deputy Superintendent Burlow made a reduction of approximately 400,000, and he still has the better part of almost 380,000 that he has not spent. That's not to say that the needs haven't been met, because he's been using other funding sources, and those include, for example, school choice. I mean, in addition to PPE supplies, he's also been using school choice to address some of those curriculum needs and textbook needs, as well as the other federal grants. But that almost 400,000 again is rolled into that figure there. Thirdly, as I stated in my executive summary, our contracted services remain unencumbered, and that's almost $500,000, 480,000, almost 486,000 and change that is unencumbered. And again, as needs arise within special education, we make the appropriate encumbrance, and that reduces that value. But for SPED contracted services, that's also a fairly large contributor to that balance. And then last, there was, in terms of regular ed, about $105,000 in contracted services that had yet to be encumbered. Operations and maintenance. We have fully encumbered our utilities. We've fully encumbered our fuel, and the balance that you see there again is a lot of building needs that haven't building equipment needs and building needs that haven't been addressed. Again, we're looking to tackle the HVAC issues in the buildings, and those are being paid out of the general fund, but they're not being charged to operations and maintenance. And the reason for that is because I created a line this past summer, and it's for any COVID-related expenditures, in the hopes that we can receive reimbursement for these expenditures through our FEMA grant. The winter is knocking on our door. Oh man, winter will be here before you know it. Though we did have the savings, though we did top off all of our oil tanks last June, with the savings of approximately $80,000. It's anyone's guess as to what this winter will be like. Pupil services, again, there's a balance there, approximately 26,000, 25,927, in change, and again, those are a lot of supplies and materials that continue to be audited, especially for the nursing staff. Special ed tuitions, we do have a shortfall there of almost 1.4 million, and again, for our tuitions, we use both the general fund, the 240 grant, and also circuit breaker. In this case here, when I speak about circuit breaker, I'm talking about both the carry forward from FY20 and then this year's allocation as well. So of that 1.4, again, what we will be doing is once we know what this year's circuit breaker will be, we will be making adjustments between the general fund and the FY21 circuit breaker. As I said earlier, we've pretty much exhausted the carry forward. There is a balance in there, and we've also pretty much exhausted the value assigned in the 240 grant, our special education grant. Approximately 1.5 million was allocated for tuitions, and that has pretty much spent. So we'll be looking to the 21 circuit breaker to make that adjustment there. Other operating costs, these are the school choice out and the charter school assessments. This is a fluid figure, and we've based our encumbrances based upon the activity to date. Once the state budget is resolved, obviously we'll be making an adjustment in this encumbrance for the balance of the year. But again, that's one of those unknowns relative to the state budget. Transportation. We have encumbered transportation, both home to school and sped in district and out of district, given the information that we know to date. The 2.2 that is there is reflective of the days in which the buses are not running, or the vans are not running. What is not known at this time, and we are fine-tuning both home to school and sped in district if there is going to be a need for additional equipment. Our special needs students started today. The day went great. Christine Smith and I have a debriefing with AA Transportation this Wednesday morning at about 11 o'clock to reflect upon the past 2 days, what went right, what went wrong, and how everything is going. So there may be a need to add additional equipment, and if so, that would come out of that available budget. And we have broached that with AA Transportation, and they're willing to assist us. But one of the challenges that they've made us aware is that even if they have the equipment, they may not necessarily have the drivers or the monitors for that equipment. Relative to the big buses, again, we're working on the routes now. We had a preliminary review last week, and knock on wood, so to speak, given the numbers that we had last week, things were looking good in terms of the reopening, if you will, on November 18th, and running the buses and running all the buses at the capacity that the DESE says they have to be run at. But in both instances, and actually even with Vanpool, what I still don't know yet, and I'm waiting on both providers, is the additional cost that they will pass on to the district for the cleaning and for the related materials for cleaning. So those numbers are still not known yet. So that's a fluid figure right there, the 2.2, and it is most likely going to be reduced. In debt, again, we've encumbered our debt. We're making the appropriate payments, and we should be good for the year in terms of that there. I'm going to stop for 30 seconds, grab a glass of water, but I'm happy to entertain any questions.
Dan, I have a question, and it may be related to the transportation topic. So if you would like to save the answer, you can do that.
No, please do. It's fine.
I'm curious with what you just said about paying for additional cleaning materials and monitors.
Yep.
I'm curious why we are doing that. Because it's part of their. I'm honestly curious because it's part of their operating expenses. And although it's unplanned, do we have something in our contract that says we would be paying for additional cleaning if it could be for any reason? I'm really curious because I had not heard that.
Sure. So, couple things, Malaya, but for example, let's just talk about Vanpool. You know, they do a majority of our district routes. As I reported to the committee, they've yet to sign this year's contract, and we're going back and forth. And Kevin Hincamper, the president, sent me a proposal last week, and there are a number of routes for this year that have gone up considerably, and so we're going back and forth. But as part of that, they did send a pricing sheet in terms of what they expect to pass on to the districts, not only Wachusett but districts, relative to cleaning, both in terms of the human capital and in terms of the materials. Again, we haven't agreed to anything, and that's to be negotiated. If that's a real matter, if you will, that we're going to have to hammer out with them for sure.
I'll see how that plays out before asking more. I just that sounded, I don't know. It sounded perhaps not quite 100% something we should be bearing the full cost of, but that may be a bigger discussion. So just my opinion.
Any other questions on year one budget?
So I guess I have a quick question. This may be more for Mr. Carlson. But as we are transitioning back into school and we have kids eating or carrying food out in larger amounts, are we going to need to bring back people in the food staff? What does the budget line look like for how food might affect? I know normally it's just a revolving account that pays for itself, but how are we projecting out how that's going to affect us this year?
So that's a great question, Ken. We will be looking to bring back staff, and I do meet with Mrs. Barton on a weekly basis. And one of our concerns, one of the things that we're focusing on this year, are her revenues vis-a-vis her expenditures. I will have a report for the committee at our next meeting to project out how we think we're going to land for this fiscal year, given what we know at that time.
Thank you.
Dan, I have another question.
Please.
If no one else has one, we can't see Mike can't see our hands, so I'm sorry.
It's okay.
Go for it.
You mentioned that you have a separate line item not reflected on this for COVID-related expenses. Is that correct?
Yeah. So in the general fund, Malaya,
Yes.
I have a line item and that I created, and the reason for that is that and I brought up the certification sheet from the FEMA here.
Yeah.
It just makes it a heck of a lot easier to pull that information, and that line item, we charge to that only those expenses that would be on the AP warrant. There is a second line that I will create. It'll be a reminder to self tomorrow on the payroll side. And we'll be using that line to charge off any staff who put in for the appropriate leave relative to COVID, and that's where their salaries will be charged off. And again, my objective is to see what we can be reimbursed, if anything, through this grant that's up on the screen here now.
So that's not reflected here. So that's good to clarify. Is it? I don't want to create extra work for you, but is it something that you could share with us at some point, that line item? Because I think being able to see that might answer some of the larger budgetary questions that we've been asking all along about kind of where is this money going, and what are we spending it on, and what's, PP is being covered by different funds. And I think seeing that might clarify some of that. At least for me, it might, but I don't want to create extra work. If it's a very difficult, like 10-step process to do, don't do it. But if it's something that can be shared easily, a summary, if not every expense, it may be useful.
So why don't we do this, Malaya?
At least to me, it would be.
And Mike, if no issues, let me run a budget report tomorrow. I'll run it in detail, and I'll send it off to the committee. And just so that you know, and I'll put this in my note to the committee tomorrow. But the line that I'm referring to is, and again, I'll put this in my note tomorrow, but it's QCV 400, QCV 400, and I'll get it out to you before the end of the day tomorrow. And I'll run it in detail so you can see it.
Well, I appreciate that. As I said, don't spend hours on it. I think it would be useful.
So Malaya, I think that, and correct me if I'm wrong, but I think that what you're getting at is one component of something that we've been for, I think, for the last couple of meetings, and that is a buildup of what we expect, given where we are today, given the mode that we're expecting to operate in from instructional model, remote then hybrid model. And given what we are assuming to our best information about how state revenues will fall, what is our buildup on budget? Are we still operating at what is effectively fiscal year 20 levels? Right. And so, I think there were questions that we had at the last meeting, but I didn't see in any of our information for this meeting that tells us, what are the additional expenses, some of which, Malaya has alluded to, that we've incurred. What are the reduction of expenses that we've experienced? And how does that align with our new assumptions on revenue? And that, to me, is the detail that I think this committee has been trying to get to understand where we are and how we're thinking about fiscal year 21.
So let's do this, Mike. This packet does not reflect that buildup, to use your term. Let me get this done this week or early next week, and I will send it to you for review to see if indeed the document that I've prepared is what you're looking for. Let's do that.
But let me put it up. I mean, does what I'm stating, I think it's not just been me, but I think other members of the committee have been looking for that level of information. Am I misreading, or is that accurate?
Yeah.
Okay. All right. The two other I had on fiscal 21, Dan, maybe one other. No, there's two. So the sped tuition shortfall of 1.4 million, and you mentioned that we spent the circuit breaker revolving. So I assume that when we say we've already spent the circuit breaker revolving, that's a function of first dollars in, first dollars out. We know that we need to spend it right away, so we just spent it, right?
That's correct. There is a balance in there, Mike, and
you said
but it's pretty much been spent out.
My question is, so do we have, so when we say that there's a shortfall of $1.4 million, is that a shortfall pending additional payments from the state for circuit breaker, or is there a shortfall because there's been a change in behavior or activity above what we assumed when we built this budget?
No, the shortfall is a result of pending the payment from the state of circuit breaker for FY21. We have no word whatsoever as to where that is.
Okay, and then you that there was transportation that was encumbered, and you mentioned a $2.2 million figure, but it wasn't clear to me what $2.2 million number reflected.
Sure. So, in essence, that's the balance that hasn't been encumbered. For example, I use the term loosely, but in terms of the home to school, the yellow buses, with those buses starting on November 18th or thereabouts, I think I mentioned this at our last meeting. There's a savings there, if you will, a little bit over $1 million. Again, because the buses were supposed to run for 180 days, and I believe they're running now for 130 days plus. So that's factored into that. That savings is factored into that 2.2, and also with special education, there's a savings there as well for FY20. And I don't have the figure here in front of me, but I believe it was a couple $100,000, and I'll confirm that figure. But that's factored into that as well. Plus, we still have not resolved the contract with Vanpool, our out-of-district provider, and we're using last year's figures for the encumbrance there, because we have a difference in terms of some of the pricing, for some of the routes. Not all, but some of the routes increased significantly this year. So we're drilling down on the reasons for that increase. So again, that savings is reflected in that 2.2 there.
So that I'm clear, the 2.2, is that a savings number when we say that it's not encumbered?
The short answer is yes. However, there is a however, as I stated earlier. There may be the need for additional equipment beyond what we budgeted. There may be a need for more vans or a yellow bus or 2 or 3. And as I said earlier, there are other costs that at least one provider is looking to pass onto the districts that we have not come to an agreement with.
Okay, understand. And so the way that we get to the 2.2 million, I think you said 1 million was a reduction of 180 days to 130 days, give or take. And then there was a couple 100,000, which gets us to 1.2. And what was the other million?
So there's also with Vanpool as well, and that's and again, I don't have that figure here, and I'd be happy to itemize that savings for you for our next meeting.
Yeah, I mean, to me, this goes hand in hand, build up and breakdown that we're talking about before, and so I think it's certainly newsworthy that there's a $2.2 million understanding. There are certain caveats to that potential savings, but again, understanding the backup behind it, I think is important as well. So that's to be forthcoming. Any other questions on fiscal year 21? All right, there are quite a few questions about transportation. The next item on the agenda is a transportation settlement update.
Mike, before we get to that, sorry, I did want to just share with the committee, at least in my agenda here, just an update on the bond refinancing from last week. So if I may, very quickly, we refinanced our Hilltop Securities, refinanced 3 bonds last week on the 30th. 2 were relative to the high school construction, and the third was relative to the Jefferson oil remediation project from a couple of years ago. And as you can see, let me just enlarge on this for you a little bit. This is refinancing over the course of 9 years, and this will really be a savings for the towns. And at the end of the day, we picked up a savings of approximately $676,357.12 over the course of refinancing for the towns. This will impact. It's good news, I guess, for the towns. This year, there'll be a nominal savings that we'll need to recalculate in terms of their debt for this year. This is time sensitive. I wanted to run this by the committee this evening because the full committee at their meeting next week will need to vote on accepting this work here that was done by Mary Connie of Hilltop Securities on behalf of the district.
So Dan, question whether or not, or I mean, are you asking us if we have any questions about the refinancing? Is this just a bond reissuance at a lower rate? Is that what we're doing here?
Right, and again, we're saving over the course of 9 years $676,000. The
Right.
saving for this year is the better part of almost $42,000. I share with the committee. I didn't have a motion on the agenda, but I assume that the committee will be in support of moving this forward to the full committee for a vote next week to accept this activity.
I would assume so as well. Kind of thing that as rates become favorable in this environment, kind of thing that so long as our bond rating supports it, the kind of thing that we should be doing and being good fiduciaries with the towns. Any questions regarding the bond reissuance?
Yeah, Dan, this is Ken. First off, thank you. Again, it's great work. Secondly, this may be a stupid question, but this doesn't change the date of maturity for any of the bonds, right? We're still the same original date.
Yes, correct. And this is the press release that was developed last week. And this document here, these are the 2 quotes that came in. And Roosevelt and Cross will be awarded the bonds. Thank you.
Good deal.
All right, so this doesn't have to do with transportation, but to the next item is transportation. As we've been talking about really throughout the 20 and 21 discussions, this matter was referred to Legal Affairs Subcommittee. I'll stand corrected, Mike. You were there, and I think Megan's still on the call here, but it was at Megan's request that this be referred to Legal Affairs. We did have a meeting last week. I attended that meeting, and basically we spoke about it at a 50,000-foot level. I gave the committee, the subcommittee, just a quick overview as to what the issues were at hand. Attorney Bartulis was on the call, and Attorney Bartulis has been instructed from legal to reach out to both attorneys and have discussions to see if there can be some type of a settlement agreed to move this forward.
Questions on the transportation settlement update?
Dan, and maybe Megan, I guess I don't have a full understanding of why, because we've discussed, and I don't want to speak for anyone, but I actually watched that meeting and I still didn't have an understanding as to why, because we've discussed this for months. We've had 2 proposals we put before the full committee, which were both voted down with pretty much the sentiment that we shouldn't really be paying them, was my sense. I don't want to speak for the committee, but that's what I took from a lot of those discussions. I guess I'm just confused as to why, how, and you've told us numerous times that they weren't amenable to discussing anything else, because we tried that approach. We asked them numerous times. So I guess I'm confused as to why, unless they have proposed some legal action that we're not familiar with, why we're still having this conversation about paying them when we've had it in our subcommittee several times. We brought it to the full committee twice. I guess I'm, and maybe there's something I'm missing, and I'm sure it will get sorted out, but I'm kind of confused about how that occurred, or if there's some reason for that, based on the discussions that we've had and that the full committee has had. My sense was that we were done because they would not consider anything else, because we tried that over the course of the past, however many months we've been staring at this. So I haven't really heard a good explanation, and I'm honestly just curious, because it seems like a lot of time to be spending on something that we've already spent a lot of time on. And if they were amenable to some kind of compromise, I thought we've already approached them about that along the way, and they said no. So what has changed?
So, Megan, are you still here? Or Mike, were you at that meeting?
I mean, I watched the meeting. I heard the request, but I didn't really hear any explanation for it, honestly. I wasn't there, but I did watch the replay of it because I was very curious.
So as I hear Malaya's question, I'm hearing a couple different questions, right? And so the first question that I think I've heard her ask is there any legal impetus on behalf of our transportation providers that are causing us to take this up in our legal subcommittee, having our legal counsel do outreach to the transportation providers? Last I heard, that's, that these are ongoing events, right?
I'm sorry, Mike. I'm sorry, you broke up there. I'm sorry.
Okay, so I'll react. So the first question that I think implied, and Malaya, correct me if I'm wrong, but I think the first question that's implied is there any legal impetus on behalf of the transportation providers that are causing us to put this up in legal subcommittee and cause our legal counsel to reach out to the transportation's legal counsel?
So what has happened? After the full committee voted to not support this, I shared the word with both vendors, and I think with AA Transportation, I think I don't want to speak for Mr. Ernenwine, but I think he's looking for some type of a settlement, and he raised the question. Would the district consider having their counsel speak to my counsel in the event and maybe work something out? Relative to Vanpool, I did receive a telephone call from the CEO of the parent company, NRT, from a John McCarthy, shortly after the vote was taken. And Mr. McCarthy basically said to me, I'll see you in Suffolk Superior Court.
Okay, so there are legal actions that we were not aware of. So I appreciate that. That makes more sense now. I just honestly was confused. about why we were still discussing it. So thank you for that.
So I don't know if Dr. McCall mentioned that at all. Again, I wasn't at that meeting that night, but
I don't recall. I did not recall that because that would have clarified a lot. Honestly, I was just very confused as to why it got moved, and I don't really care. We've talked about it for hours, and I don't know what else we could possibly discuss, but I just didn't understand why we were still continuing the discussion with them. So, thank you for that. Because we actually did have our attorneys involved in a couple of our meetings where we discussed, and I remember that our attorney talked with them, Naomi at least, I think, talked with them on our behalf, or some was mentioned. So I just
Mr.
was, I was,
Batulis did.
okay, sorry. I just
Okay.
remember that there was attorney conversation at some point, and we still couldn't come to an agreement because he wasn't willing to budge. So I guess, I mean, it's in legal, so now I guess we're removed from the process, so I won't worry about it, except to say that my understanding was that he wouldn't budge, and that's how we got to the vote we did. And here we are still talking with him. So I don't know where that leaves us, but that was surprising to me. So I will let it go for now because it's not our concern, except for how much it's going to cost for the attorney and court fees we might get ourselves into. So thank you.
Yeah. Any other questions or comments on transportation settlement? The only other comment that I'd make is that, this is, I would not say that this is out of our hands per se, in so much as what I mean by that is, I think this is multifaceted. I think that there's certainly what is a good business practice perspective, what is a good vendor management perspective, and what is what is our site on perspective. And I think that those viewpoints, the committee, ultimately the committee viewpoint on how to move forward, and it seems that this conversation is steering more towards bringing in more of the legal perspective to that. But that doesn't, I don't think that means that it's to the exclusion of those other views. So I'll put that opinion. All right. Transportation, moving on to fiscal year 21 enrollment trends and impact the budget.
So this was on the agenda from our previous meeting, and again, this is actually going to be, I think, an ongoing topic as we move forward throughout the fall and we begin the development of the FY22 budget. Just as a sidebar comment, we did submit the October 1 count just the other day. I don't have that official count available yet. Certainly, hopefully, and that needs to get certified, for lack of a better term, by the DESE. But as requested by the chair, and again, just using from a couple of weeks ago the figure of 249 students on the premise that we would lose those students if you look at the FY21 per pupil foundation budget figure of $10,619 that could, keyword is could, translate into a reduction of approximately 2.6 million potentially in FY22. Again, with the October 1 count finalized, we'll have better definitive figures in terms of what our October 1 enrollment is and how that will impact FY22. On the premise that we are looking at a reduction, a significant reduction in state aid. The time is now in terms of moving forward in what plans can we make with the 21 budget that can help us in 22. Number one is to do a transfer later on in the year, assuming the funds are a year, into transportation stabilization. And that transfer would be certainly much more than $150,000. It's a long way to May, so to speak, but certainly, and again, where as I said earlier, the buses aren't going to be rolling until the middle of November. Who knows what's in store for this year? The virus is beginning to sneak up again. If that's going to require further shutdowns, I don't know, but certainly making a transfer of significance into the stabilization is one action. Number two, a second action to address potential shortfalls is to work towards a carry forward of FY21 circuit breaker funds. And again, it's too early to even ascertain what that might be. We don't know what our circuit breaker is going to be for FY21, but to bring forward a sum of money into 22. Number three, to work again towards bringing forward a sum of money in school choice. Again, we did bring forward, in essence, a full year's amount from 20 to 21. And if we can do that, and again, it's still a little bit early to fine tune these figures, but that would be another objective to help us offset the funding challenges in FY22. Last but not least, as we begin to gear up for the E&D process later on this fall, in late October thereabouts, is to perhaps, keyword is perhaps, to allocate a sum of money from excess and deficiency to help with the FY22 budget. And these are just ideas now, but certainly very much in the planning process for FY22, given the estimated reduction in Chapter 78. And what we don't know as well with next year's figures is that, as I said earlier this evening, Chapter 70, they basically, the DESE basically negated the implementation of the SOA, the Student Opportunity Act, in FY21. That hopefully that gets reinstated in FY22. So that may perhaps offset, not significantly, but offset the revenue shortfall in 22. So there's a lot of balls up in the air, but the time is now in terms of beginning to plan accordingly to address those challenges.
Thank you, Dan. Any questions regarding enrollment trends?
So this is Carl. I have I was wondering if you'd be able to, and I don't know if you could, there's someone you could reach out to at DESE in regards to Chapter 70 funding, because, and the reason I ask is because in my reading of Chapter 71, along with the hold harmless provision in it, there, as I read it, our Chapter 70 would never get cut because of a reduction in student enrollments. What would happen is basically it gets flatlined, and it would be continually flatlined until our enrollment climbs back up above the level that we were at. And in trying to, I mean, admittingly it was a cursory Google search, but I couldn't find any record of any state school system losing Chapter 70 money because of declines in enrollment. I'd seen stories about, I'd seen where, like, again, basically it gets flatlined. There's a nominal increase of like 0.5% year to year, but I mean, basically it's a flatlining of it. And so if that isn't, and it's a flatline that seems like it can extend for multiple years. And so if that's an accurate representation of the way the Chapter 70 funding works, then we wouldn't necessarily be looking at a 2.6 million cut. It would seems like it would be basically a flat line from this year but then also a potential flat line the year after that until we could climb back out of this. And so I think we need to get clarification on if that's the case, because that, if you're talking a flat line or a $2.6 million cut, that's a pretty marked difference with that. And so I think we probably need some clarification in order before we can even really start looking at what those impacts are.
So Kyle, I have your question from the other night, and it is my intent to give the subcommittee a brief overview of that at our next meeting. It wasn't on the agenda for this evening, but as I wrote, I will present that to you at the next meeting. I think if you go back to probably 2008, 9, and 10, when we had the last significant fiscal crisis, the DESC offset the loss of Chapter 70 with the SF funds, so that district didn't lose money at that time. Again, the SOA is state law that has been postponed, at least for this year. That may work in our favor in terms of some of the potential loss of students relative to our October 1 count.
Can I follow up?
Dan, I didn't hear in Carl's question anything related to SOA. And I think that the analogy to 2008, 2009 is a little bit different, right? I mean, I think what I'm hearing through in Carl's question is when we have a precipitous drop in enrollment in our Sims count, whether or not the impact is to be expected that we would have a flat line of aid coming in from the state, or whether there would be a correlation aligned with that precipitous drop. And so that question to me, if he's raised before and he's raising it tonight, is certainly relevant to our question of what the impact of these enrollment trends would be in our budget here. And so, Carl, if I'm reading it right, I think that question, if we don't know the answer, is very much in order for us to try to understand for committee.
Yeah, Mike, that's pretty much the kind of the line of question I was getting at is, again, and I don't know if we'd have to go to the state to get clarification on it, because like I said, if we're looking at a flat line for next year, comparing that with a $2.6 million cut from the state, those are two very different starting points. And if it's the flat line, then we're like, okay, maybe we dodged a $2.6 million cut this year. But in that scenario, then maybe we're looking at flat line for like the next 2 or 3 years, which again, there's kind of that ripple effect of not hitting it, not being as dramatic, as serious next year, but there's lingering effects following on from that. And so I think, again, as I said, as you kind of alluded to, getting that correct interpretation of what that looks like when you have that drop in student enrollment, I think we probably do need to get an answer to which of those, kind of what's the correct interpretation of that.
There are 2 people in the DESE who work relative to Chapter 70, and I'm happy to reach out to one or both of them tomorrow. And I'll follow up with the committee this week.
This is Ken. Can I just make a follow-up on an observation question or whatever? So this is new to us, but it's super not new in the Commonwealth, right? So all we got to do is look at our window at Quabbin and see that this has been going on there for years and years and years. And so hold harmless debt. These are topics that our local legislators have been picking up. I mean, I think one object lesson that you could do for us is just to have us see what's happened to Quabbin's numbers the past 2 years. We're following their numbers. It's all on the website. We don't have to call anybody to see that. I do believe we still do get the per pupil increase, even if you're in hold harmless. You don't So there even would be a slight increase, even though it puts you in hold harmless debt going forward. So like I say, it's not a mystery. Like it could be different because we're worried about Chapter 70 itself being cut, with this, if the state's $4 or $6 billion in the hole. But how declines in student enrollment affect Chapter 70 is something that we probably shouldn't waste our chits going to the state asking those sort of questions. We could go to MASC. We could just see what
Mars.
Quabbin did.
Yeah.
And because the SOA, I think, is a distraction. I mean, that's
Yeah.
a totally different question. Is my point.
Yeah. I was going to suggest something along those lines. I know Mars has talked about it a lot too. I've seen it come up in a lot of discussions. I suspect it will come up. I'm going to the MASC workshop on Chapter 70 because of the updates. I think it's tomorrow. I don't know. I've lost track because they're talking about the current budget disaster. So I suspect it might come up then too, and I can pass that along. I did have a question, or a clarification about SAO funds. I hesitate to have that brought up a lot because actually, as Ken just said, it has kind of a specific purpose from my understanding. I mean, not a line item, but those funds are designated for a specific purpose and there has to be a plan submitted and they're not just general funds. So I hate to use that to offset our budget situation. And I guess we'll have to see how that plays out. Hopefully they will show up eventually, but I know that's kind of a different discussion. But also, I mean, drops in enrollment also impact a lot of other things like transportation and SPED reimbursements and circuit breaker and Medicaid reimbursements because we're providing fewer services. If we don't have those kids here, we can't be getting reimbursed for that. So I think there's a lot of areas where it probably will impact our budget that we can't really predict right now. I guess that's my point beyond just the Chapter 70. So hopefully they will come back, but yeah, I think it'll be a year or two before we see that. So.
And right now there also is a document out there, right, with DESE with regards to a review of hold harmless, where essentially the urbans are trying to get rid of hold harmless, except for Boston. And I know we've talked about this at management, but they are looking for impact on those studies, right? So it's something we should be aware of as a subcommittee, that even though, as I was saying, the history should make it pretty clear what we should be doing with regards to other districts, it is possible that there could be some revolutionary change this year.
So I have a couple quick questions, just in terms of the counts. So Dan, you mentioned that the SIMS counts were submitted on October 1st. You mentioned the 249 students above last year's levels, which, I think was the counts that we received 2 full committee meetings ago, or maybe even 3, actually. I think the last full school committee meeting, we were up to about 300 because there was an update as of September 10th on the homeschool number. So that brought us to just a little bit south of 300. What are our current numbers, and what's the current number of students that have gone either school choice or to privates or school choice out at this point?
So again, Mike, I don't have those official numbers. She just wrapped them up the other day on October 1st. I know that Darryl was looking to see them as well, and I don't think that he had received them yet. But I will get those figures because they're due into the DESE, or they were due into the DESE.
I can share with you that I sent Darryl an email, I think on October 1st or 2nd, asking for that information when he had the numbers. And he indicated to me he wanted to wait until they were certified and reviewed before he shared them. So I asked him specifically what we had reported as of the 1st. So we had some ballpark estimate, and that's what he said. So.
Yeah, for my purposes, it's not even so much as an official submission as much as
yep.
ballpark.
That's what I was looking for, but that's what he told me.
Because our numbers are a month old, and it was a crucial month, and so I'm not sure I understand what we're doing. why it is that if we have numbers, we can't share them with the school committee. I just don't understand it. It makes me wonder what is the timeliness of us reporting those students who are leaving for privates, because it seems odd to me that we would have a moderate refresh of homeschool numbers, but no refresh of students that are going out to privates. And, you know, I did hear in our last school committee meeting when somebody had asked this question directly of Dr. Paul, and I'm not sure if he's on the call tonight or not. I would welcome his response if he were. What is it that he needed to review those numbers first? I'm not sure. I'm not sure I understand why. And so it's striking to me that on October 5th, after the numbers have been submitted, that we could not share, for the purposes of our understanding, potential impact for next year of what those numbers are.
So Daryl, I don't believe is on the call tonight. Secondly, Malaya, to your point, and to Mike, I have a meeting with Dr. McCall in the morning, and I'll speak to him about this matter.
I mean,
and I'll request the information from him.
As business and finance director, you would be concerned about the magnitude of these numbers as well. And so it sounds like you have this meeting tomorrow morning.
Yes.
Okay. Any other questions regarding this 21 enrollment? Moving on to policy review, we have an item for policy 4323.2, policy relating to budget finance bidding requirements.
So this has been on our agenda in the past, just never got this far. And what we're looking to do is to adjust the thresholds that are listed in the current policy and align them with chapter 30B that was amended a couple years ago. So what you see in front of you, and again, Mike, I've got it here up on the screen for the others, is the current policy. And then as I scroll down, and I put in italics the amounts that I'm proposing that the current figures be amended to. And again, these adjustments would be aligned with chapter 30B.
So Dan, I have revised policy language that you're projecting on the screen.
Yes.
Any questions regarding that, those changes or the revised policy?
And as an attachment, I also included from the Inspector General, which I'm scrolling down now, are the thresholds as delineated by the Inspector General. So the revised policy would be aligned with them.
Any questions or comments?
So how often do these numbers change in the MGL, give or take?
The 30B figures changed about 2 years ago, Ken, and I am aware that there is some legislation pending about making an adjustment to the current figures, especially in light of COVID. I'm not so sure that that legislation has a lot of wings on it to affect a change.
And I don't want to hold this up for this question, but there was an argument, I think, when I really dropped the ball when I was chair about us doing policy reviews, but I think Lance was making points of maybe trying to write policies when we revise them such that they kind of more just refer to the MGL rather than have specifics so that we didn't have to keep changing them. But I think if it's an unusual that it changes, if it's not changing like every year, I think it's fine to have the numbers in.
They don't change every year.
Yeah.
That's been past practice, correct?
Okay, because otherwise we could say something like an amount exceeding that stated in MGL, whatever, and then it's good for longer. But I'm fine. I'm not going to making a deal about that.
Yeah, I mean, this strikes me as one where we should be very explicit about what the dollar thresholds are, but should be in alignment with them. We should be on top of making sure that we're refreshing them as. All right. Any questions regarding this policy, proposed policy?
So if I just may, as a point of practice, is the next meeting the first reading of this, or is this considered the first reading, or how do we proceed here?
So I think the way it would be for us or for you to work with Daryl and Megan to put this on the agenda for the full school committee meeting, and have this as a vote on the agenda under Business and Finance to update this policy, and the first time that appears will be the first reading.
Okay, thank you.
Sure. All right, next item, contract extension with District Auditors, Melanson CPA.
Yes, so this was actually on the agenda for the full committee, and we brought it back here. This is, in essence, it'd be the first year of a possible two contract extensions. They've been here 3 years already, so we're looking to exercise the first option year for Melanson CPAs. And just as a sidebar, they're now called Melanson CPAs and not Melanson Heath.
So I think it's the full school committee, but whether this discussed at audit advisory, and I think that it just happened to be the case that there was nobody from audit advisory that was at that meeting, and so I'll ask the question again. Was the contract? I mean, this to me is more the purview of audit advisory. Has this been discussed, and are you taking this up there?
This was not discussed at the meeting this past July. If you'd like it referred back to them, then we'll certainly put it on the agenda for our next meeting, which I hope will be sometime in November.
Well, let me get some feedback. I mean, it seems to me that this is, while I appreciate hearing the reports, being able to reflect upon it, decision whether or not to extend it, unless there are some extenuating, probably first and foremost should lie with that committee. But I'll put that out there to other committee members to whether or not they have an opinion on that.
Like you were breaking up there about what I had an opinion of, but I have an opinion, so I'll say it anyway. I'm sorry if it's not what you were asking for, but I do think we should be mindful of how long we go with any one auditing firm. I mean, we had issues of this in the past where we were with the same firm for a while and they start giving us clean reports, which is great because we've kind of hit their thing, right, that they look for. And then, we go to a new firm and then we discover new things that maybe that firm hadn't been seeing. And nothing against the current firm, but sometimes a fresh set of eyes is a good thing. So I don't know if there's industry practice about how long you stick with certain auditors, but I remember like 6 or 7 or 8 years ago, I don't know, I lose track of this. There was an issue with the fact that we had been with the one company for a bit too long. Again, nothing against the current.
No.
If I may, you have, I think, a very good practice here. Even if you extend it out to 5 years, I've been in districts where on the city or town side, they've had auditors for up to 20 years, if not more. And that's their choosing. but we're looking to maybe make a change after 3, 4, 5 years, potentially. I think that's a great practice to adhere to, for sure.
Yeah, I had that same recollection. I don't remember where I heard this, but at some training along the way, I have this recollection of three years perhaps changing after 3 years, but I can't recall where I heard that. So I would be curious if there was guidance on that. But also my second question was that if this is for FY21, you said they've already started work
They
this
have,
year
they
us?
have,
So
they're into the 20 audit now.
So it would be a little awkward to not renew their contract for this year if they're already doing work for us. But I think that issue of timing is something we should look into. I don't know. As I said, I wish I remember where it came from, but I recall hearing it on a couple different occasions that there's a recommendation. I don't know if it came from MASC or somewhere else about that. So it may be something to look into. But obviously they're doing work for us this year, so that would be a little awkward.
They started the work actually towards the end of last year, just getting some materials together at the end of FY20.
So.
Just looking at our policies, it does say that at the end of every 3 years, the AAB will review the performance of the auditing firm, and so yeah.
So Ken, I know that I was breaking up. Hopefully I'm not breaking up now, but my inclination was to refer this decision to AAB, so long as nobody had an objection.
We hear you now. But we filled the static with our own noise.
Okay. So we'll refer this matter to AAB. Next item is Director of Business Finance contract.
That's correct. My contract expires June 30 of 2021.
Any questions on the Business Finance Director contract?
Well, I guess it's a process question. We had changed this position to be, supervised by the superintendent. I know we're still required to hire this, but should there be a process by which we hear from the superintendent about this issue?
I would think so. I would think that the super would be doing outreach with the committee on this topic. And maybe that was his intent, but he's not here tonight. So why don't we pass this on?
Is that something that we need to inquire about? Since there's a lot going on and it's probably not on the radar yet. Unless Dan pointed it out, but
it's through the chair. It's very much on his radar. I've brought it up to him. I'm happy to speak to him tomorrow again about this matter. I will speak to him about this matter tomorrow.
Okay. Thank you.
I mean, it's on an agenda for a school committee subcommittee meeting.
I realized that after I spoke.
Yeah.
So
and like I said, it was his intention to speak to us about it tonight, but he's not here, so maybe he'll speak to us about it at the next meeting. I have any outside of obviously of this meeting about it that I can share, so I have no additional information to provide. All right. Next item, approval of minutes. I'll entertain a motion to approve the minutes of June 17, 2020.
So moved.
Second.
Any questions on the minutes? Rebecca, do you mind calling the membership roll?
I'd be happy to. Dennis?
Thank you. Dennis, yes?
Otmar?
Otmar, yes.
Mills,
Mills, yes.
Gustafson.
Gustafson, yes.
Perfect.
All right. Next, be happy to entertain a motion to approve the minutes of July 22, 2020.
So moved.
Second.
Any discussion on the minutes? All right, Rebecca?
Dennis,
Dennis, yes?
Otmar,
Otmar, yes.
Mills,
Mills, yes.
Gustafson.
Gustafson, yes.
Perfect.
Next is meeting or motion to approve the minutes of the meeting of August 5th, 2020.
So moved.
Second.
Any discussion on the minutes? On the motion? Hearing none. Rebecca?
Dennis,
Dennis, yes?
Otmar,
Otmar, yes.
Mills,
Mills, yes.
Gustafson.
Gustafson, yes.
Perfect.
And finally, entertain a motion to approve the minutes of September 8th, 2020.
So moved.
Second.
Any discussion on the minutes? Hearing none. Rebecca?
Dennis,
Dennis, yes?
Otmar,
Otmar, yes.
Mills,
Mills, yes.
Gustafson.
Gustafson, yes.
Perfect.
Thank you. Thank you all. Thank you, Rebecca. Next item is next meeting. Just looking ahead, we will try to reconvene this committee for the end of October, tentatively focused on October 26th, so long as that does not conflict with a school committee meeting, which I don't think it does.
Not that we know of.
Not that we know of, right? So always a fluid situation. Next, I'll entertain a motion to adjourn.
So moved.
Second.
Any discussion on the motion to adjourn? Hearing none. Rebecca?
Dennis,
Dennis, yes.
Otmar,
Otmar, yes.
Mills,
Mills, yes.
Gustafson.
Gustafson, yes.
Perfect.
Thank you, everyone. Thank you, administration. Have a good night.
All right. Good night. Thank you.